This is actually, here's the Treasurer now. This is in the wake of the announcement of those GDP figures out this morning, coming in at 0.9% for the September quarter, a little bit better than expected. The expectation had been around 0.8%.
Well, thank you for coming along. Today's national accounts show that the economic growth strengthened in the September quarter, and that as an economy and as a country, we are making the transition from the largest resources investment boom in our history to broader-based growth. The transition process is underway. Real GDP grew by 0.9% in the September quarter and 2.5% over the past year. This is a strong increase, up from the 1.9% growth recorded in the year to the June quarter. Australia's annual growth is double the rate of that of Canada. It's higher than the G7, and it's above the OECD average. The key drivers of economic growth in the September quarter were net exports, household consumption and housing construction, more than offsetting the expected fall in business investment as we move through this transition period. This composition of growth demonstrates, as I said, that the transition is underway in our economy, and that is why it is so important that as a country, as a government, we focus on growth-friendly policies, policies that grow the economy, policies that support jobs in our economy. The sheer scale of the resources boom means that this transition will take time, and there will be challenges, as we know. The Reserve Bank Governor refers to the current period now where the headwinds are at their strongest. The Australian people understand this. They know. They understand what's happening in the global economy. They understand what's happening in our domestic economy. And they are already out there making changes in what they're doing. They're already out there working hard every day, saving and investing to ensure that they can secure their prosperity in this modern economy and dynamic economy. But there are positive signs, because the thing about a transition is you're on your way to a better place. And there is a strong place for us to go to, and that's where we're heading. There are positive signs of a strengthening economy and signs that our economy is heading in the right direction. The national accounts show that the economy continues to see a moderate expansion. Our economy has shown considerable ability to adjust and to do so in a way that has preserved both overall economic and financial stability. After the historic highs of investment in the construction phase of the mining boom, and with the end of the labour-intensive development phase in the mining industry, production in many major projects is now coming online, and the ramp-up in resources sector output is still underway. The next phase of Australia's growth transition will be for businesses in the non-resources sector of the economy to increase their investment. The conditions are in place for this to occur. Following the GFC, businesses have been consolidating their balance sheets and are well positioned to take account of into a more active role in driving growth in the economy through investment. In domestic markets, we can expect to see high levels of confidence translate into stronger domestic demand that will encourage higher levels of non-mining investment. As new markets open up for our exports, particularly in our expanding services sector, Australian businesses will see opportunity to invest in their productive capacity. More and more Australian firms are experiencing success in developing and marketing their products and experiencing success at penetrating overseas markets. Our free trade agreements and a more competitive Australian dollar facilitate these outcomes. Exports of goods and services in the September quarter rose by 4.6%, the strongest growth in 15 years. As these developments offer the prospect of increasing profits, they will support increased capital spending and employment in the future. Many businesses will first look to increase their labour force to fully utilise their existing capital stock. This is already occurring, with employment growth picking up significantly. Job ads remain strong and the unemployment rate has fallen, especially youth unemployment, that is now below the levels at the last election. Employment is growing at the fastest annual pace in 5 years, and workforce participation is increasing. This initial activity can be expected to be followed by investments in fixed capital such as plant and equipment. investment plans may initially be limited to the replacement of old machinery and equipment until firms in fast-growing sectors invest to expand. In this regard, non-mining investment can be seen as a lag indicator, as business first adjust to stronger domestic demand through their hiring policies before taking advantage of historic low interest rates to fully realise the growth opportunities. Encouragingly, consumer confidence has increased, households are spending more, and we are building a record number of new dwellings. Continued growth in household income and rising wealth lifting household consumption by 0.7% in the September quarter and has supported a pickup in retail trade over the past year, which is a good sign heading into Christmas. We should expect that the adjustments that we have seen in the exchange rate, the labour market and interest rates will help create the environment that leads to increased investment. Over the last 7 years, the Australian economy has experienced the biggest structural swings in a century. While economic transitions of this magnitude are rarely seamless, the rebalancing continues to take place, and the Australian economy is evolving, it is broadening, and it is growing. The Turnbull government is backing those Australians with our policies, whether it's in tax, whether it's in productivity improvements, whether it's in trade, whether it's in infrastructure investment, whether it's for a stronger financial system. In all of these areas, we are working to support Australians, to back them who are working and saving and investing. And we're establishing this strong platform for jobs and growth in our economy. So this transition is underway. There is a long way to go, but Australians understand this, and they're looking to the government to continue to pursue policies that support jobs and growth, which is what we're doing.
Treasurer, are these good figures the Turnbull effect or good luck?
What we're seeing in these figures is about economy transitioning, Paul. And these figures are showing the journey that we're on. And I think these figures should give Australians confidence about the prosperity that still remains ours now and in the years ahead. And that it is not beyond the Australian economy and Australians and Australian businesses to be able to adjust to what is a very dynamic environment. And we are doing just that as we see these things diversify. Now, it is not unexpected that we saw business investment figures fall as you move from the most heavy phase of the investment boom in the mining sector. That's to be expected. But that's been compensated for by an increase in household consumption. It's been compensated for by a lift in exports, and Australia is earning its way. Now, as these demand elements continue to strengthen, then that will provide the reason, the case for then the investment to follow, which is my point about those factors being a lagging indicator. Now, we do obviously want to see in business investment in the non-mining sector grow in the future, and we believe that will occur in the years ahead, but only if as a country we remain focused on policies that support growth and jobs. There is no room for indulgent policies that go off and cost the economy and cost jobs.
How do you explain the weakness in public sector investment?
Well, as you
Failure of infrastructure?
No, I wouldn't put it in those terms. As you'd know, David, they're very volatile figures, public investment. They move around every single quarter. And I think there is no single explanation for any of these, and we saw that in the last quarter. I'm sure we'll see it in the next quarter. I think the real story of these accounts don't fall in those figures. I think what we see in the real story in these figures is being around household consumption and exports and what's happened in business investment. On public investment, I think this will move around from quarter to quarter, so I don't draw any particular analysis on that movement.
Treasurer, given most people aren't directly involved in shipping things off ports,
Sorry, I missed that.
given most Australians are not directly involved in actually exporting resources, what do you say to people who live in just about every state where state demand is contracted?
Well, the state demand, of course, doesn't take into account the export figures that you're referring to. But if I do go through the year state final demand figures, New South Wales at 2.6%, Victoria at 4.2%. Yes, contractions in Queensland and Western Australia, but they're also states which do benefit significantly from things going through ports, particularly in the resources sector. In South Australia, 1.6%, Tasmania 1.4%, Northern Territory 4%, ACT 0.6%. One of the very interesting things when you look at the state figures is the strong growth we're seeing in New South Wales and in Victoria. And I think this in part reinforces the story that the Prime Minister has been saying, particularly about cities, but also about what is occurring in the performance of our services sector. I mean, Sydney and Melbourne in particular, based on these results, but we would hope many of our cities will be, if you like, the mine that previously were in remote areas. They're now in their cities and they're delivering services exports. And the functioning of our cities will be incredibly important economically and to drive productivity as well. So the Prime Minister's focus on cities policy as an economic driver, I think, is a very clever one. It's very clever.
I hear what you're saying, Treasurer, about the household consumption figures and net exports as a sign of transition, but there doesn't seem to be a lot else in the national accounts where you can say, well, this industry is really starting to pick up, or this other industry is picking up. Can you elaborate a little bit about how you see those sectors working? And also, you just mentioned that we don't have room for policies that aren't helping growth, and I just wondered whether you'd like to elaborate on what you think those ones are.
Well, I'd be happy to expand on that, Laura. But firstly, in terms of the contribution to GDP growth, as we've seen, as a 0.3% contribution from the services sector in these figures. There's through the year growth of 3.5% in the services sector and 0.5% in the quarter itself. Now, I think that's a strong indicator. Now, that is just shy of the contribution of the mining sector at 0.4%. So I think these figures very much do point to that transition that is occurring and the broadening in our economy, and I think that's also reflected in what I just said at the performance of both the New South Wales and Victorian economies, and that's very welcome, and that's why I think it's important that we continue to go down that path. But we're not replacing services for mining. What we're doing is broadening the economy as a whole, and we're diversifying the economy as a whole, and that's the plan. And that's why competition reform is important. That's why microeconomic reform at the state level is important. That's why infrastructure development and financing is important. That's why all of these things go to building the growth and of the country, but also drawing out the productive capacity of the country and really backing Australians who are already doing this. People looking forward 10 years and saying, well, where do I need to be in 10 years from now? What sort of training do I need? People are coming out of school at the moment thinking about the studies that they're going to undertake and what's going to position them to be in the right place in this modern, dynamic and very agile economy. The innovation statement will come out next week. Now, in that statement, I think that will focus on yet another area where we can continue to diversify our growth and broaden the base of our economy. And this is all part of the transition story. And that's the story we're in. That transition story has challenges, it has frustrations, it has good news and it has bad news. But the good news is we are making the transition. The economy is broadening and it is growing. It's growing faster than the G7. It's growing faster than the OECD. It's growing faster than comparable economies like Canada, whose numbers only came out last night for the same quarter, and we're double. We're double what we've seen in Canada, and in places like Brazil, well, those comparisons are obvious. So I think that these numbers give Australians encouragement for the work they're doing already, and it encourages them to keep going.
Treasurer, do you think the Australian economy and equity markets are prepared for when the Fed makes its decision next month on interest rates? Do you think it's factored in that and Glenn Stevens has mentioned that when the Fed starts lifting rates, it does cause all sorts of ripples through the global economy?
Well, you'd have to ask them. I mean, I'm not about to sort of try and second guess what's in the heads of markets or in the heads of other central banks. Or that's purely, I think, for them to make those decisions and them to make those assessments. What our job is, what my job is to put in place policies that are going to grow the economy. And to come back to the earlier question, there are alternatives to that. I mean, the 45% emissions reduction target, which has been put forward by the opposition, is economic vandalism. It's as simple as that. It's economic vandalism. We put considered, measured, respectable targets to the Paris conference. Labor are off on a frolic of their own with the Greens. And the worst news about that for Australians is that they're not prizing growth as the focus of economic policy. They're prizing green votes as their focus of economic policy. We are prizing growth and jobs. It is our absolute focus. And as I think people know in this building, I can be pretty focused.
How important is the GST reform to the transition? You're meeting the states in a couple of weeks. Is that where you'll discuss that sort of reform, or is it where you'll kill off the GST talk?
I want a growth-friendly tax system. That's what I want. I want a job-friendly tax system. I want a tax system that is going to back Australians who want to work and who are saving and investing and who are out there doing it right now. When the Coalition changes the tax system, we cut taxes. We make the tax system better. We make it growth-friendly. And that will always be our focus. Now, we've been working with the states and territories on these issues, and they have their objectives. I'm setting out ours very clearly, as has the Prime Minister. So whether it's changing the tax system or it's innovation policy or a $50 billion national infrastructure plan that we're rolling out, the asset recycling initiatives, all of this is designed to grow jobs, to drive growth in the economy. And again, these figures highlight that while we're doing well comparably to the rest of the world, our future very much will depend on how successful we are with productivity improvements in the economy going forward. There won't be the commodity prices shield that there has been in the past. We know that. We know where commodity prices are now. And obviously that will play into other announcements I have to make between now and Christmas.
What's behind the growth in exports? What's behind the growth in exports? Is that just services, or is it?
Oh no, the growth in exports principally is we've moved into the production phase in the mining sector, and those volumes are very strong, but we've also seen strong performances in those other areas as well. So it's not like these things have turned off in these other sectors. When I talk about the mining sector, I'm particularly talking about the investment in the mining sector, and the investment boom in the mining sector was driving a lot of activity now for some years. Now, that has predictably and understandably tapered off. I made this point in the House yesterday. There's no surprise that the CapEx figures that we saw last week, that may have been at the not so pleasant end of expectations, but they were within the expectations. And that just reminds us that we have to persist with our strong growth policies through this transition. And we're working with Australians, we're walking alongside them. As they walk through this transition and work through this transition, we are backing them in and working through it with them.
Treasurer, just to go back to your other point. Could you just clarify on the tax process? Are you still planning to have a green paper as well as a white paper? And have you any idea yet about the timetable of these two papers, if there are two?
Well, on this process, Michelle, I've never got ahead of myself. And the next phase is we've got COAG coming up next week. The Prime Minister will have his first opportunity to engage with his state and territory colleagues. This will be my second opportunity. We're still working through the objectives of the states and territories in this process. The next meeting will focus very heavily on state taxes. And that's the purpose of the next meeting, to focus on state and territory taxes.
But the plan was to have a green
Well,
paper.
there's no ultimate change to those plans, and the form that may take and its timing, I think, is very conditional on the progress we're making with the states and territories, but I think also with the Australian people. I think we're now getting to the point that this isn't even a debate about tax. It's actually a debate about growth. And so, at this podium, I've talked about our response to the Harper Review. We've talked about federation reform. We've talked about changes to the tax system. It's a green paper on growth, not just on taxes, and having a growth-friendly tax system. That's the point. If it's not going to help grow the economy, then why would you do it?
Is the appropriate place then to have a discussion about the GST actually in the Federation White Paper and discuss the whole issue of state taxes in that context and leave it out of the federal White Paper?
Well, I think these options are open to the government, but it's about a fusing of all of these initiatives. And reforms to how you run the Federation can support growth. Reforms to how you run competition policy and the productivity payment process that I outlined and we're now working on, which we'll discuss with the states in first principles next week. This is all about driving growth. And so I know that when the Labor Party talks about tax, they just want to talk about increasing one tax or the ciggies tax or things like this. That's not a plan for growth. That's just a plan for taxing people more. What we have is a plan to grow the economy, of which changing the tax system is part.
So, Treasurer, have you seen the modelling done for the states on the GST?
Well, as I said in the House, and as I've said at numerous press conferences, there was modelling done based on the request from the states and territories to model those outcomes. I presented that at the last meeting of state treasurers to those state treasurers in response. So that I've been very transparent about that. I mean, it's been hiding in plain sight in press conferences and in the Parliament. So I don't think there's anything terribly revealing about that. The difference is we did that in response to a request from the states. I noticed the Shadow Treasurer actually initiated modelling on a broadening of the base of the GST and an increase in its rate. Now, he has chosen not to allow that information to be made available to the government or the public. That's a matter for him. I don't know what the other scenarios were. There's at least 3. I don't know what the other 2 were, and I don't know whether there's 5 others, but that's a matter for him.
Treasurer, just on an earlier point about commodity prices, terms of trade's down again, the income measures are negative. What's that likely to mean for wages in the year ahead?
Well, one of the very positive things in these set of numbers is that the compensation of employees, and that makes up about almost half of the income measure in the GDP, that went up by 1.1% in the quarter and 2.6% through the year. Now that's...
Will that be sustainable?
Well, this is an encouraging sign, and that was backed up in the wages information that came out over the course of the last week. And so we are seeing that growth in the compensation of employees. It's happening at the same time that we've seen a fall in unemployment, and at the same time we've seen an increase in workforce participation as well. So these are good signs, and we've also seen a lift in labour productivity as well. So with a growth and more people getting involved and a greater output, albeit that's still being impacted by things happening in the resources sector, these are good signs. But they won't be sustained if you don't have strong growth policies. They won't be sustained if you don't have a tax system that supports jobs and growth. It won't be sustained if you don't pursue the reforms this government is pursuing, the innovation reforms, and to have a clear, I think, way forward and a clear vision for where we want to be. And I think that you are seeing that outlined by this government.
Treasurer, is the GST a growth-friendly tax?
Of course, it can be. I mean, the previous Howard and Costello government proved that. That was part of a package of tax changes. Of itself, it is just one element, as proved to be the case back in 2000. It's not about any one tax, it's about the mix of taxes that makes the difference. And you can get the mix wrong, and I would argue at the moment, because it's been left unattended from its last servicing for 15 years, that the mix has got out of whack. And so that means that we need to look at growth-friendly tax mixes. Now, there's an opportunity to do that. How far we will be able to do that, well, that's a function of many different things. But the government is serious about it. But the point is this: I'm not looking at changing the tax system to chase higher expenditure. That's not our purpose. That's Labor's purpose. That's why they're putting a tax on ciggies, and that's why they're going after superannuation in the way they're choosing to do that. That's why they're doing those things, because they just want to raise more money to chase higher levels of spending. That's not my purpose. We'll control expenditures as we are, and we'll make some statements about that in the mid-year update. But it is the way we seek to deal with the budget is to grow the economy and to control expenditure.
Mr Morrison, is it realistic? Do you believe it's realistic you can change the tax system without touching the GST?
Well, it's a bit of a hypothetical, Phil, and that's the process we're working through. There are things that can be done purely at the federal level, and the states understand that, and we can work through those issues. And similarly, the states can pursue changes to their tax mix at their level of jurisdiction as well. They've chosen not to do that or engage in that at the moment. Oh, some have, to be fair. South Australia's, interestingly, has had a modest run at that. So all levels of government can do things differently within their own jurisdiction. What we're trying to explore with the states and territories is how we can actually work together to get a better tax mix that drives growth. Now, that's important for all states. It's certainly important for states which are doing it tougher than others, and they're very engaged in this process. But even states that have done well, like in Western Australia and Queensland, that's where they're feeling the transition of this economy probably most profoundly. And the Governor was making some comments, I think, about that today in Western Australia, about the Western Australian economy. So this transition process that we're seeking to lead and to do that in concert with the Australian people is very important. And how you deal with taxes is an unavoidable issue that you have to address in leading such a process.
There's a breaking story about a massive hack by the Chinese and the Bureau of Meteorology.
Can we stay with national accounts?
Well, I'm just wondering whether it affects any of, it's saying that it's compromised computer systems across the government, so I'm just wondering whether it affects any of your portfolio areas.
Well, that's not a matter I've had any briefings on, so I'm not in any position to make any comment.
I just wanted to ask you about Malbrough, actually. So he made a statement in the House this morning apologising for the comments he made on 60 Minutes in question time yesterday. Should that be the end of the matter? And what do you make of Labor's assumptions, or assertions, I should say, that he misled Parliament?
The government is focusing on jobs and growth, and you've seen that in question time. Week after week, we've been setting out what we're doing to focus on the issues that the Australian people are most focused on, and that's their job. They're looking at this place and they're going, who's focused on my job? Who's focused on the jobs of the Australian people, the jobs for my family? And this government is 100% focused on that. The opposition is bouncing all over the place. I don't know what they're focused on. I have no idea, and I don't think the Australian people do either. But what we're focused on is a national platform for growth and jobs in our economy, a tax system that supports that, an innovation system that supports that, an infrastructure plan that supports that, a budget that is strengthening to give us that capacity, a financial system. All of these things are designed to actually give people that confidence that they can go out there again tomorrow, continue to work through this transition that is happening in our economy, and ensure that at the end of their process, them and their families will be better off. We're going to back them in that process. I think the figures that we've seen today indicate once again that we are making this transition. The economy is heading in the right direction, but we can take none of it for granted, and we must focus on growth and jobs. Thank you very much.
Okay, so that was live from